I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, wishful thinking. Shopping app Wish falls in its stock market debut. Meantime, AI lender Upstart pops 30% out of the gate. We're going to talk to both CEOs on the first day of trading. Plus, the retail landscape could be transformed for good post-pandemic. Longtime e-commerce investor Kirsten Green joins us to share her take as one of her portfolio companies, Hims & Hers, builds up an empire for personal care products and prepares to go public via SPAC at just 3 years old. And free speech, privacy, and data sovereignty. These are the pillars touted by the CEO of the social network Parler. The app became a magnet for conservative users during the election, but is the momentum keeping up? All of those stories in a moment, but first, U.S. stocks rising on speculation that lawmakers are getting closer to a stimulus deal aimed at reviving the national economy. Bloomberg's Katie Greifeld has more from New York. And President-elect Biden, Katie, just told reporters he doesn't think a deal is going to happen tonight. We're going to get a live update from Capitol Hill in a moment. But how did this all play out on the markets?
Well, you saw that those stimulus back and forth, will we, won't we get a deal, did weigh on risk sentiment today, as did the Federal Reserve. As you look into the markets, you can see that crude oil and the S&P 500 did end slightly higher, but stocks did drop initially after the Federal Reserve didn't change its bond buying program, and it didn't extend the maturity of its bond purchases. That initially lifted Treasury yields and the dollar, but as you can see, both of those moves paired, and the Bloomberg Dollar Index did end lower on the day. And again, even though stocks did squeak out a gain, there was definitely a defensive tilt to today's session. Tech was back in control on a sector level, and the NASDAQ 100 closed at another record high today, and it was helped by gains in Google, Amazon, Twitter, your quintessential stay-at-home stocks. But another bright spot in today's session was PayPal, and it has to do a lot with Bitcoin. Remember, in October, PayPal began allowing its customers to buy and sell cryptocurrencies, including Bitcoin, and that paid off for PayPal today. Share closed over 4% higher as Bitcoin surged to another all-time high above $20,000 for the first time, Emily.
All right, Bloomberg's Katie Greifeld with that update for us from New York. Katie, thanks so much for all of that. I want to get back to the much anticipated stimulus deal. U.S. congressional leaders are rushing to finalize a relief plan in time to attach it to crucial government spending legislation and pass by the end of the week. The virus-related measures are expected to be worth less than $900 billion. President-elect Biden calling the talks encouraging. I want to bring in our Bloomberg Congressional reporter, Eric Wasson, who is on Capitol Hill at this moment. Eric, President-elect Biden saying that he doesn't expect a deal to happen tonight. What is the latest that you know?
You know, things do seem to be slowing down a little bit right here. I think we're getting very, very close. There are some remaining issues. One of the main problems has been in the last couple of hours that Democrats did agree to drop their demand for $160 billion in state and local government aid. This is to make up for lost revenues for those state and local governments that were hit by lockdowns and lost sales tax revenue. But instead, they submitted an offer to the Republicans that had some money for FEMA. And the way that it's written, the Republicans are worried it's a backdoor to get $90 billion to state and local governments. Democrats say, no, it's not a backdoor, it's just a $1 billion item. There's been a lot of very technical back and forth on that, but we're down in the weeds here, and I think that, they're getting very, very close. Now, if they can't produce a bill tonight, we may see a House vote on Friday, and it could see the Senate have to vote on Saturday. That does raise the possibility of a very short government shutdown for just a few hours on Saturday or a short-term stopgap spending bill. But I think we're very close. So if we don't get it tonight, I still think we're in the zone to get it this week.
We're getting new details as we speak. One headline crossing saying the deal said to include about $17 billion in aid for airline. What can you tell us about the sticking points?
That airline thing seems to be pretty much a done deal. That was in a bipartisan proposal from senators that came out. There's also $4 billion for airports as well. One of the things that we were still seeing, though, is on the direct stimulus checks. Initially, the White House and Democrats had pushed for $1,200, a repeat of the stimulus checks we saw in the spring. We're still seeing a very concerted push from Bernie Sanders and House progressives. They haven't quite said that they'll vote down a bill or try to bring down a government shutdown over it. But at this point, the deal only has $600 checks for individuals and $600 for children. So it's smaller than that they had wanted. there could be some movement around trying to get that higher. But the problem is, if you do that, you could bring the total price tag of the bill over $1 trillion, and that has been a red line for Republicans. They say they cannot vote for something that's $1 trillion or more. So there is some sticking points there. At this point, I think it's probably going to remain that way because the alternative is to reduce the $300 per week supplemental unemployment insurance benefit, and that's seen as key and a key item for Democrats. So that's where we are on that.
Now, Biden has said that this stimulus bill will be only a down payment, but obviously looking at how hard it has been to get this to pass, I mean, how weight can we put behind that promise once he takes office?
Well, the major issue for Biden, especially if Democrats do not take those 2 Georgia seats, will be dealing with the Republican Senate. We'll be trying to cajole them into doing something. He does have some ability to try to get something done next year as far as putting forward an infrastructure package. Perhaps there can be some COVID relief on that. He has to raise the debt ceiling. That's going to become a crisis next summer. Perhaps he can do some government spending associated with that to increase the relief. But, yes, it's definitely going to be a tough slog. There certainly are some critics of the speaker and Democrats saying, they could have cornered Trump into doing a $2 trillion deal 6 weeks ago when he thought the election was on the line. They didn't do that deal, and they may never get it.
Senate Majority Leader Mitch McConnell yesterday finally acknowledged that President-elect Biden, had won the election. Now that you're seeing more Republican leaders getting on side, how does that change the dynamic over the next few weeks heading into Inauguration Day and the deal making that needs to continue to happen between now and then?
Well, the key thing there is getting the Biden nominees approved. We talked to some Senate Republicans today, asking them, are they going to start sending out questionnaires, start interviewing and doing the other background checks for people like Janet Yellen, who's going to be the Treasury Secretary, or Javier Becerra, who's nominated for the Health and Human Services. We have not seen movement on that. They're telling us that as long as the Georgia runoffs are not decided, the Senate's up in question, and they can't really start organizing hearings. So that's going to be something we're really looking at. Biden wants to have his team and cabinet in place January 20th or right after that. And in the past, we've seen hearings before a president is inaugurated. So we're looking very closely at that. But, yes, now that McConnell has acknowledged that, there is the possibility of getting moving on those nominees.
All right. Our Eric Wasson, our Bloomberg Congressional reporter who is standing by in the halls of Capitol Hill right now as lawmakers continue to hammer out that deal. We'll be waiting for more updates. Meantime, coming up, Context Logic, the parent company of the popular online marketplace Wish, went public today. Their founder and CEO, Peter Szulczewski, joins us coming up. This is Bloomberg. All right, the online e-commerce retailer Wish went public today, dipping below its IPO price. The first time in a while a tech company has done that. This in stark contrast to some other tech IPOs, including those we saw last week, Airbnb and DoorDash doubling in their debuts. Joining me now, the founder and CEO of Wish, Peter Szulczewski. Peter, thank you so much for joining us. So obviously, I know you priced at the high end of the range. I'm sure you thought a lot about the price, but what is your reaction to breaking the IPO price when so many of these other companies have soared out of the gate?
Yeah, first and foremost, Emily, thanks for having me on this very exciting day for myself and obviously the team as well. Look, no real reaction. I think, honestly, if I just watch the stock price all day, I'll probably drive myself crazy. And in all seriousness, we expect a certain degree of market volatility within the first few days, if not weeks of trading. But we're very much focused on the longer term and really utilizing the proceeds from this capital raised to achieve and unlock the vision that we've been pursuing all along, which is to really enable e-commerce for what we feel is a much more value-oriented and underserved market by sort of the traditional e-commerce players. And provide a much more discovery-oriented, fun type of engagement, something more along the lines of TikTok for shopping on your smartphone. And I think if we just focus on that in the long run, the markets will reward us.
Well, welcome to being a public company. Unfortunately, investors are going to be focusing on your stock price. And to be fair, you're a $15 billion company as of this IPO. That said, I'm curious, how did you think about price in the final hours, given what we saw with DoorDash and Airbnb, and wanting to strike that right balance of, you know, a nice pop, but not too much, and not leaving billions of dollars on the table?
Yeah, honestly, Emily, this is not something that I've done before. And it was not really the core focus for me. For me, it was getting the right investors to come on board long term and see us through this journey, which is going to last decades.
So plenty of investors have said similar things. An IPO is not about a day. It is a long journey, and it's a journey of years. So let's talk about what's ahead for you. Wish is an online discovery platform where you connect third-party retailers with customers at low price points. What is your sort of product roadmap ahead?
Sure. I mean, I think it's to continue doing what we're doing. So you mentioned value-conscious consumers. I think we continue to double down on that. In our core consumer demographic, if you look at our buyers, 75% of them earn less than $75,000 per year from a household income perspective. And that's 60 million households in the US, but that's 300 million households in places like Europe, where we have actually a larger consumer base and a larger portion of revenue coming from than the United States, where we started and where we're headquartered. And really to continue to innovate on the product, to really make the shopping experience not just about fulfilling intent and responding to searches and doing fulfillment really well, even though probably in a slightly more expensive way, but really innovating, whether it's video, all kinds of fun features, and make the shopping experience fun again. On smartphones for, again, hundreds of millions of households to really sort of complete the comprehensiveness of our catalog and become in the end game, the default shopping destinations for hundreds of millions of value-oriented households around the world.
Now, quality control remains a big issue. There are some customers out there who've complained that, you know, what they get doesn't look quite as good as it does in the picture, or maybe it's a counterfeit good. Some people have even received empty boxes. What else can you do to get this under control?
This is one of our other core focuses, along with logistics. So first and foremost, we have a huge amount of growing consumer feedback coming to us across many different languages, many different locales. Just in the first 9 months of this year, our customers have provided us with over 85 million reviews and ratings of products, over 72 million ratings and reviews of our vendors, uploaded nearly 2 million videos. And that's a great way to get feedback from the consumers in terms of not only sort of what doesn't meet the customer's expectations and figure out a way to make sure that doesn't happen again, but also amplify the products that are really working well within sort of a certain audience of our consumers. And on top of that, in terms of all the work that we've done on logistics, which is primarily the reason why we feel our business is much more robust than ever, is we've taken control over 90% of the shipments. If you sort of rewind back to the beginning of 2016, we controlled 0% of our shipments. We never actually had access to the physical packages. As of October this year, we control over 90% of the shipments, and that allows us to do a lot more in terms of quality control, but also providing a much more reliable, faster fulfillment experience as well.
What about from a customer service perspective? When you're working with third-party retailers, you only have so much control over them. I mean, there are some folks who buy things, say they can't get an answer from sellers, especially if there's a problem. How can you take more control of that relationship?
Yeah, I mean, so we are a part of that relationship, whether it's our customer support staff or increasingly so, it's our power users. It's our sort of Wish Star community, Wish expert community. That's not only just providing sort of objective feedback on the quality of products within their area of expertise, but in addition to that, providing how-to guides, answering questions, and really making that connection. Look, a lot of our suppliers are in the manufacturing hub of the world, the factory of the world, China. And a lot of them don't speak the language. Even if they have the ability to communicate in English, we have transactions in over 100 countries on any given day. And this is where sort of empowering our community to help with those types of issues comes in really, really handy. And that's something that we've been scaling and will continue to scale for a long time.
Now, you said you turned down an offer from Amazon to buy the company a few years ago. Now Amazon is one of your, if not the most formidable competitor. What is your plan to take on Amazon over the long term, especially given, that e-commerce is here to stay and growing?
Yeah, I mean, the way that I kind of see it, we don't think we're really competing with Amazon head on. And there are a couple of reasons for that. First and foremost, is sort of human to computer interaction. I love Amazon. It saves me time, especially, during a week where you're doing a roadshow or you're taking your first company public. I would love to pay to save more time, and Amazon allows me to do that, and I can afford it. Our consumers are looking for a different kind of trade-off. They're willing to give up a little bit of time in terms of delivery time, making that longer, or walking to one of our brick and partner stores in order to pick up the products, in order to save a little bit of money, whether it's 2, 3, 4, 5 euros or dollars, et cetera. And then from a sort of engagement type of perspective, our platform, again, it's over 90% of the engagement and the transactions and the orders come through mobile devices. Those tend to be Android more than iOS. But it's a very different type of experience. It is a browse-oriented, discovery-oriented experience where even out of the daily active users that come in and end up actually buying something, over 70% of them never actually initiate a search query on that day. They're browsing, we're kind of predicting what type of products they will like, and ultimately getting them to buy them. So it's not an intent-based experience. We generate inspiration, awareness, and demand for a lot of these products.
All right, Peter, we're going to have to leave it there. Very interesting to hear your roadmap ahead. Peter Szulczewski, Wish founder and CEO. Congrats on getting out of the gate today. Coming up, another tech IPO, the lending platform Upstart going public. That one soaring 30% in its trading debut. I'll speak to the CEO next. This is Bloomberg. Upstart, the company focused on providing AI solutions to lenders to help evaluate individual loan eligibility, went public today, soaring 30% above its pricing in a trading debut. The company pricing yesterday $20 a share, first trade $26 a share, ultimately closing the day up almost 50%. Earlier, I spoke with CEO Dave Gerard and asked about what he thought about the pop.
I'm not a big believer that a pop is a really bad thing. I mean, I kind of think, I know there's different viewpoints on this. For most of us, you just kind of want to get through this process. We're a company that's generating cash, so we're not exactly as sensitive as others might be of getting the last dollar out of the process. But frankly, just getting through it before the end of the year, getting to focus back on the business in 2021 is really the big win for us.
Roblox and Affirm delayed their IPOs, according to our sources, to get a better handle on this crazy market. Did you at all think maybe we should wait until 2021?
We were ready to go. It felt like that thing, we had started this process over a year ago and it was really interrupted by COVID. So we've been in this process where I think a lot of us at the company feel like we've had 2 jobs for the last 15 months. So by no means did we have any interest in postponing it till next year.
Dave, your technology helps make loans happen. Talk to us about the demand you're seeing in the pandemic, given that there are so many people out there who are hurting.
Yeah, 2020 obviously has been a really difficult year, and sort of assumption going in that credit would be abysmal, it would be a disaster. But what has really happened is, maybe through the government stimulus or through other efforts, the consumer's done actually relatively well through this year. Their savings levels are up, their credit card balances are down, their spending is down, which generally from a financial perspective is good for the consumer. We're also really happy to say that AI lending has proven itself. It's really as if to our bank partners with respect to the performance of the loans, it's kind of like COVID never happened. The model really did particularly well despite all the disruption of 2020.
So should investors, given your place in the process, should they be at all concerned about the risk you're taking on? Obviously technology, and I know AI is helping make a lot of these loan connections, but can some things fall through the cracks?
We don't actually take credit risk ourselves. We provide the technology to the banks who are the lenders. So we don't, 97-ish% of our revenue is fees paid to us by banks to help them originate credit better. So we don't have the direct exposure, but for sure, our technology performing well through COVID or any type of environment is vitally important. That's actually our proposition to the bank, is we can help you originate credit that performs better, that is more automated, a better product for the consumer, et cetera.
So tell us about the technology and how that AI proposition works.
Yeah, I mean, it's like other AI systems. You have an enormous amount of data that you gather over time, training data, and you are developing machine learning algorithms. And it's very analogous to, autonomous cars and what Waymo's or Tesla are doing there, or language translation or other things. It requires a lot of algorithms that really is a very specific type of talent to develop. It's enormous training data and variety of data. And the system just learns and gets a little smarter every week and every month. And when we say smarter, what that means is, we can improve more people at lower interest rates. So it's a better product for the consumer as each month goes by. And so it has that notion of AI in it, which is just perpetually getting better, learning on its own. And of course, we're kind of upgrading the software and et cetera. And that makes it a better product for the consumer. But just as importantly, it's a better product for our bank partners too. They can have a more profitable, more reliable product, but at the same time, it's also a better product for the consumer.
So who are your competitors? Are Prosper and Lending Club, direct competitors? And what do you have on the competition?
Yeah, almost on the consumer side of our business, almost anybody who's offering credit to the consumer in some sense is a competitor. But they all kind of look the same to us because they use a traditional approach of credit score based lending, where they all just kind of in many ways are similar. And we've built a model that's so different that whether there's 5 competitors or 50 or 100, again, we've built a very proprietary system that has a lot of advantages. On the other side, we have competitors that also serve banks with technology, which is a completely different world. So we have this interesting thing where we're kind of both a consumer and an enterprise company wrapped in one, and that's somewhat unusual, I should say.
So now that you are a public company, what are your plans in 2021, and how does this help you accomplish more of your goals?
Well, for sure, first year as a public company is super important, and we're going to be really focused and thankful to get the event behind us and focused on the business. But, for us, we're a growth company, so we need to push the AI further. We're pushing from personal loans, where we started, now into automotive lending, which is another whole category where millions of people are paying far too much for their auto loans, and we can help with that.
Upstart CEO Dave Gerard there on day one as a public company. Coming up, a non-biased social media platform based on free speech. We're going to talk to the CEO of Parler. Coming up. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. The social network Parler bills itself as non-biased, free speech social media. It's been the app of choice for right-wing social media influencers seeking alternatives to Facebook and Twitter. As a result, at one point in November, it became the #1 downloaded app on Apple's App Store. Parler CEO John Mates is with us now. John, thank you so much for joining us. So in a crowded social media landscape, how do you differentiate Parler from the other options out there?
Thank you for having me on. Well, Parler is a paradigm shift for the entire social media community. So a lot of the tools and things that are kind of central and authoritative on Facebook, Twitter, other platforms, we're giving back to the people to choose to use by respecting the First Amendment and respecting people's privacy.
What kind of traffic have you seen through and since the election? Obviously, it took off during the election, but since then, it seems like things have slowed down.
Well, this has been a trend ever since Parler has founded. So, if you even go back to the beginning of this year, we had around 300, 400,000 accounts. Now we have 12 million. And, a large chunk of that growth was around the election, but a large chunk of it was also 6 months before the election as well. So this is a normal trend in our space, where we insert ourselves into into what's going on by offering people a solution to not be censored and to not have their data mined or, pillaged, like we like to say a lot of these other places are doing to people's data. And so during these viral events, we see some great growth, and we look forward to having more of them next year too, because we will, and we have a lot of fun ones planned.
Now, as you say, you're technically about free speech and not any particular political ideology, but let's be fair, you've got a lot of conservative users flocking to your platform. Do you think that this is something, that there is something there that liberal users could find value in?
Oh, tremendously, actually. So there is a lot of people on the left on the platform. Obviously, they're outnumbered greatly by conservatives right now, which is fine. We are unbiased in that we're not defined by who's on our platform, but by our neutrality in handling the situations. What people on the left are going to find is that they are going to want to have conversations still across the aisle. And as they're pushed away from Twitter and Facebook and other platforms who don't want political discussion, it seems, they are going to be coming to Parler to have that discourse. And what's really nice, especially for everybody, not just left, right, and not even politically, is that when you follow somebody, you see the content that you opted into. There's no algorithm trying to determine what best to show you. On Parler, you see what you want to see, you get what you opted into, and you participate in a way that you've created. And so if you want to see left-leaning content, you follow people on the left, and that's what you'll see. You want to see sports, you follow sports people. And so you get what you want, not what the platform wants you to see. And that's why I describe this as a paradigm shift, because these other places are manipulating your following and what you're seeing based off of data they've gathered around you, which is why I called them data pillagers. And so it's a paradigm shift altogether.
From what I can tell, the president hasn't signed up for Parler yet, President Trump. Do you think he will after inauguration? And why isn't he there yet?
Well, I kind of see that it is inevitable, but, it's not something that we're basing our entire, strategy off of, right? Parler is going to succeed no matter what, because we have a founding principles that I think are required today in changing the atmosphere of social media altogether and changing the direction of our conversation online. One that's more kind of back to the people, back when, the internet was new and fresh. That's what we're trying to bring us back to is a people's place online, not a place for these kind of big tech oligarchs. So if he joins, that's great. We welcome him. If President-elect Biden wants to join as well, he's welcome. So we want everybody to join, and one day we think everyone will.
Have you had any contact with the administration to make that happen?
Well, I like to stay out of marketing, out of any of these kind of conversations. I like to focus on the tech. I'm an engineer by trade, so I like to stick to that world.
Facebook really cracked down on QAnon finally after many years in the lead up to the election. Did you see a pop after that? Do you think that you have attracted a number of QAnon followers who are trying to find a haven in another platform?
I don't think that we're the preferred place for QAnon. I'm pretty vocally, I don't like them, to be frank, not the people themselves, but the movement. I don't like it. And I argue with them on the platform if they're there. But, we welcome everybody, right? So if they're allowed to be on the platform, not that we really are trying to, go out and find them to bring them there, but they're welcome. I just, it's not my preferred audience.
So let's talk about your audience. Rebecca Mercer, who's a big conservative donor and backer, does she have, or how much input does she have in how you run the business? Are you seeking her out for advice, and does she give it?
Well, she has a relationship as an investor and, but is not a part of the day-to-day. So a lot of what we do is central around our marketing team, our advisory team, our employees. She's not a part of those conversations because she's an investor. I'm sure you're aware, if you purchase shares of Facebook, you're not welcome onto the day-to-day to have input. So it's a similar situation there.
So let's talk about the return on her and everyone's investment in your company. There does seem to be an issue with porn and bots promoting inappropriate content and inappropriate interactions. What are you doing to get a handle on that?
Well, if you look at any social platform anywhere, you will get people trying to attack it, either to promote advertisements, promote an agenda, whatever it might be, right? And so, yes, we crack down very hard on anybody who does that. I wouldn't describe it as a problem on Parler because 99% of people don't see it. In fact, anybody who is sharing that stuff, most of them get flagged automatically by our sensitivity filters. So I wouldn't describe it as a problem as much as one that's been manufactured by the press to try to make us look bad. But we are building more and more really cool algorithms that we're putting in the hands of people to use to help, work any kind of issues out that they might have, whether it's they don't want to see that, which, I don't think most of us do, or they just don't like, toxic speech, stuff like that. They can have the word filters, the moderation filters, and things that they can set themselves to avoid any scenario that they don't want to be in.
So what are you doing then to make money? If you're not selling data, how will you build this into a long-term sustainable business?
So we're doing what we like to call humane advertising. And so the idea behind humane advertising is we take things that you already know that you've given us to help with advertisements. So for example, right now, advertisers can just blanket make an ad to the Parler community. They can also say, hey, there's a prominent individual over here. Let's use Dan Bongino, for example. They can say, I want to advertise to everybody who's following him. They work out a deal with us by paying our CPM. And they actually get to send a little bit of money Bongino's way too, because he offered his following list to be able to promote to that audience. And so the really nice thing is people are not having their data mined, and they're not actually being targeted in a creepy way, but we can still have humane ads running out that are making us a really good amount of money. I mean, we opened this ad network just about a month ago or 2 months ago in beta form with no instructions and anything. And we're seeing a tremendous return already on these ads, a lot of interest.
Now, that said, there has been some concern about the experience being a little bit buggy. There have been some glitches at the same time. You have managed to rack up, as you say, 12 million users. You've got the FTC scrutinizing Facebook along with other branches of the U.S. government. Does Parler's success prove that Facebook is not a monopoly, or in your experience, do you believe Facebook is stifling competition in unfair ways?
Well, they're certainly getting in a lot of trouble, but I think Parler is actually proving that there is a possibility for competition, as much as people are trying to, stop us, rightfully so, because we're bringing in a lot of people every day to our platform. It has tremendous value. And so, in regards to Facebook and Twitter and these other companies, really Parler is the one thing that's kind of stopping the government from going into these antitrust suits, because we're proving competition is a possibility. So our success, in a weird way, is kind of their saving grace.
Interesting take. All right, John Mates, CEO of Parler. Fascinating to hear your vision for this service. Thank you so much for taking the time to join us. All right, coming up, another startup going public via SPAC ahead instead of a traditional IPO. We're going to hear from Kirsten Green on the board of Hims & Hers, the rapidly expanding personal care empire. She's, of course, also the founder of Forerunner Ventures. Next, this is Bloomberg. Hims & Hers has attracted 250,000 subscribers to its upmarket commodities in just 3 years. Best known for its generic drugs to treat erectile dysfunction and hair loss, the company now provides primary care and mental health services and even COVID tests. Hims & Hers is also planning to go public in a deal that would value the company at over $1.5 billion. We are joined now by Kirsten Green, who sits on the board of the company and is, of course, also the founder and managing partner at Forerunner Ventures. Kirsten, great to have you back on the show. So Hims & Hers has rapidly grown with a very customer-friendly interface. In just 3 years, it's turned into a telehealth provider. What has been the secret, you think, to this success?
Really from the minute the company launched, they knew they'd struck a chord with the consumer. And in the first week, they generated more than $1 million of prescription of reoccurring revenue. And truly since then, the team has been focused on how do we get into as many categories, reach as many people with the best offering that we can, because the moment's right. It's what consumers want. It's what consumers need. And I think it's part of a broader trend that is something like the consumerization of many sectors that haven't been approached that way. And really with this early traction out of the gate and success, the team was focused from early days in thinking about how to build an organization and a team that could thrive as a public company.
They're now planning to go public via SPAC, and I'm curious why go that route instead of a traditional IPO? Why now? It's only a 3-year-old company, and Airbnb waited 12 years.
Yes, it's true. It is only a 2.5-year-old company. I think, the team feels confident about the opportunity. They feel that they have built a trusted and high quality health platform. We're operating in 50 states today. They've enabled more than 2 million consultations across dozens of different categories. And this year, I think, has really brought to the forefront the demand and the need for telehealth services in the face of COVID, where doctors became, harder than ever to access for consumers. So, why the SPAC? I think, it offered, a couple of things that were particularly relevant for HIMSS. One was just the speed and the certainty and the flexibility, given that it is a young company. And I think in this case, too, the team found a trusted partner in their SPAC acquirer with the Oak Tree team. That was a nice compliment to them, given their institutional knowledge and capital markets experience.
Now, you invest across consumer and retail technology, e-commerce. You're also on the boards of Glossier and Nordstrom's. And I'm curious, how do you think the retail industry will be forever changed as a result of the pandemic?
Yeah, that's a great question. And I think in general, like all of us are wondering how we're going to be forever changed. 9 months has been a long time, and definitely new habits have been formed both on the side of consumers and users as well as in companies. And I think the couple of, big things that really came into view as it relates to retail and consumer this year were, one, just, new digital behaviors. People were shopping across expanded categories online like never before. Certainly Instacart and many of the delivery companies, DoorDash, which just went public, were already companies at considerable scale heading into this time period. But there were still a lot of people that have discovered them. And, given the 9 months in, the habits have been formed. And so I think that, people are more comfortable shopping across a broader set of categories online. And I think, a lot of it has been a positive experience. I have some ideas about the downside too. But, as a second thing, I think this idea of omni-channel retail really became a reality. We've been talking about it for over a decade. I think in many ways it's been largely lip serviced. And this was the first time that you saw retailers at scale jump into action to say, how are we going to use the resources we have to meet the customer in this moment? And you saw things like buy online, pick up in store really take hold, or even appointment shopping. And so I think those are new unlocks, and they're new ways that people like to shop, and they're new elements of the business model. And then lastly, I think the importance of local really came into focus this year. Where in part driven by the need or the desire, the wish you could go to your local store, or also the conversation of the importance of those businesses to the fabric of our towns and our cities everywhere. And so I think people, have shopped local. People have ordered food from their restaurants, in part not just because they needed the things that those purveyors were offering, but because they wanted to support local business. And I think all of those trends are. They were in the direction of where a lot of things were headed, but this year they really took hold.
Now, you have been very active in getting more women into VC, more women entrepreneurs funded, and I'm curious how much progress you think we have actually made. We've seen companies like Goldman Sachs, the NASDAQ, mandating more diversity on boards. Do you think we need more laws? Do you think we need more mandates if progress isn't really happening?
Well, honestly, Emily, apparently we do need more mandates, because generally the stats are still nowhere near they need to be. I think at the current rate, in the current reality, it would take us, multiple decades to get to parity when you look at gender diversity and you also look at minority diversity. And so, really from any angle you look at it, the answer to the question of do we need more focus on it is yes. And I think mandates can be helpful because they really offer a stake in the ground of what is minimally acceptable. So I wouldn't call it the bar, but it's the threshold that you need to at least be operating at. I do think that, I imagine, particularly since the NASDAQ announcement, that every board is having this conversation now. We're going to be required in short order to have 2 diverse directors. I mean, really, 2 is not enough, but it's a start and we'll take it. 1 female and 1 of an underrepresented minority. So, today in the market, like of the 3,200 companies that are public on the NASDAQ, 75% of them do not meet that criteria. So there's work to do, and putting something out there that's like, this is, the minimum that has to do is going to at least move the needle to that point. And I'm quite convinced that once people get there, they will start to see more dynamic conversations. They will have deeper connections to their audiences that they're serving, which are made up of people of diverse genders and diverse backgrounds. And that's constructive for business. And those benefits will, I believe, lead to more parity over time.
Well, and obviously at your firm, there are many talented women investors, and it's Exhibit A for how it can be a successful model. No. Kirsten Green, founder and managing partner at Forerunner Ventures. Kirsten, great to have you back on the show. Thank you so much for taking the time to join us. Okay, still ahead. Facebook taking a bite out of Apple, taking out a full-page ad criticizing the iPhone maker in major U.S. papers. We'll tell you why next. This is Bloomberg. Facebook is attacking Apple in a series of full-page newspaper ads. The social network criticizing the iPhone maker's plan to restrict some data gathering and arguing the anticipated software changes are bad for small businesses. Joining us now with details, Kurt Wagner, who covers Facebook, Twitter, and Snap for us. So, Kurt, interesting strategy Facebook is taking here. What can you tell us?
It's very interesting. We know that the 2 companies don't like each other. We've seen their CEOs exchange kind of barbs in the past. We've seen them come out with statements, especially around this iOS 14 update that's supposed to be coming next year. But this is definitely the most aggressive Facebook has, as far as I can remember, ever been against a competitor taking out an ad like this. It seems to me that they're trying to do 2 things. One, they're obviously trying to deflect some of the attention they're getting for their own antitrust issues. And 2, they're really trying to shape their own kind of reputation, right, as a company that's bad with privacy to a company that's here to fight for small businesses during a time of need. And I'm not really sure how well it's working, but it's certainly a big swing for Facebook.
Is it going to work?
Well, I don't think that Facebook's reputation is really strong enough for anyone to take them seriously right now. I posted the ad on Twitter, for example, and I would say 9 out of the 10 responses that I got were, this has got to be a joke, right? This is Facebook. This is the company that, uses our data to show us targeted ads and make money. Like, there's just not a lot of goodwill for Facebook right now. And I think when you swing at a company like Apple that does have a lot of goodwill still, I think Facebook is learning that that's a hard thing to do.
Well, and that's, my next point. Is Facebook being a little tone deaf here? I mean, it smacks a little bit of desperation.
It does. I saw someone else post today. They were kind of like, hey, read the room, Facebook, right? Like, this is not really maybe the time or place for you to do this. But again, I think Facebook sees this as a chance to lean into the things it thinks it does well, right? Which is really provide services for businesses that are struggling because they can't do in-person shopping or sales right now, right? If you're a small business, Facebook really is an important tool for you to not only to reach people, but to sell goods. And I think Facebook understands that, and it realizes it's probably better at that than most anyone else out there. And it's leaning into that in a way that's probably good, except for, they're trying to go up against Apple at the same time, which is obviously difficult.
And assume not, but any sense that Apple was at all rattled by this or would make any tweaks as a result?
My understanding is that they were a little surprised with the aggressiveness that Facebook showed today. Again, they've been kind of exchanging these types of barbs for a while, so it wasn't totally surprising, but I think it was a big step for Facebook. What I don't know is whether or not this is actually going to change anything for Apple. We have seen them delay their iOS 14 updates to try and kind of give people more time to prepare for them. I think Facebook can probably take a little bit of credit for that. But I would be shocked if Apple were to come out and actually change everything in the way that Facebook wants them to. It's just, it's hard to convince a company like Apple to do that.
Okay, one to follow. Bloomberg's Kurt Wagner. Thank you so much for that update. And that does it for this edition of Bloomberg Technology. Bloomberg Daybreak Asia is coming up next. I'm Emily Chang in San Francisco. This is Bloomberg.